Welcome to Ask Praise. We see a lot of videos on Mirembe Villas, but there's always a lack of information on how much it actually costs to purchase and live in the villas. So I decided to make a video on all the information I would ask as an investor. Mirembe Villas is a residential gated community that started in 2014. It's located in Kigo along the Southern Bypass, 5 minutes drive from Lake Victoria Serena Golf Resort and Spa, 10 minutes drive from Munyonyo Commonwealth Resort, 33 minutes drive from Kampala City Centre, and a 35 minutes drive to Entebbe International Airport. The project is jointly developed by an international real estate developer, Guoji Group company, and Buganda Kingdom. The project covers 79 acres and would expand over to 200 units, to be built in 3 phases. The first phase is comprised of bungalows and double-storied villas. Let's start with the bungalows. You have the comfortable 3-bedroom bungalow, which is priced at $93,100. The house area is 98 square meters and the plot size is 328.9 square meters. There's also a luxury 3-bedroom bungalow. It's priced at $108,300. The house area is 114 square meters and the plot size is 349.6 square meters. A comfortable 4-bedroom bungalow priced at $123,500. House area is 130 square meters and the plot size is 391 square meters. And finally, a luxury 4-bedroom bungalow priced at $154,850. The house area is 163 square meters and the plot size is 460 square meters. This is how the 24-month zero-interest payment plan works. We will use a 3-bedroom bungalow priced at $93,100 as an example. Step 1. Secure the house with a deposit of $10,000. After the deposit, you have an outstanding balance of $83,100. Step 2. The outstanding amount will be divided to 24 months installment payments, which will begin 1 month after the initial security deposit. You'll be paying $3,462.5 per month, interest-free. Please note, all bungalows are built to order. Construction begins after 70% of the property value has been paid. In this case, $65,170. And building works will take up to 6 months from start to completion. A completed bungalow will comprise of plastered walls, paint, interior decorations, doors, windows, kitchen units, floor tiles, completed bathroom with toilet, showers, sinks, bathtubs, and bedroom wardrobes, etc. Now, let's look at the double-storied villas. You have a 4-bedroom villa priced at $260,000. with a plot size of 17 decimals and a house area of 244 square meters. Then there's a 5-bedroom villa, priced at $310,000 US. The plot size is 22 decimals and the house area is 306 square meters. The double-storied villas also have a 24-month zero-interest payment plan. We will use a 4-bedroom priced at $260,000 US as an example. Step 1. Secure the house with a deposit of $10,000 US. After that deposit, you have an outstanding balance of $250,000 US. Step 2. The outstanding amount will be divided to 24 months installment payments, which will begin 1 month after the initial deposit. You'd be paying $10,416.67 US per month, interest-free. Please note, all villas have been built and are ready to occupy. Once you have made up to 80% of the value of the house, in this case $208,000 US, you can occupy. The remaining balance of $52,000 can be completed when the building is occupied. The upcoming second and third phases will have 4-bedroom apartments and more of the double-storied villas like I shared earlier. Currently planned are 2 blocks of 4-bedroom apartments. The first block will be priced starting from $75,000 for off-plan purchases, and the second block $81,000 once construction has begun. The house area for the 4-bedroom apartment is 120 square meters. What the payment plan looks like. Let's use the example of the off-plan apartment priced at $75,000 US. Step 1. Secure the house with a deposit of $10,000 US. After the deposit, you will have an outstanding balance of $65,000 US. Step 2. The outstanding amount will be divided to 24 months installment payments, which will begin 1 month after the initial security deposit. You'd be paying $2,708.33 US per month, interest-free. If you have your own design, the company provides flexibilities to customize a villa or have a shell house constructed for you as you do your own interior finishing, just like the houses you're seeing now. The property title is a leasehold of 99 years with effect from 1st June 2014. This lease is automatically renewable for another 99 years. I'll be making a video on the different types of land ownerships in Uganda. The process of title transfer will begin after the final payment. Please bear in mind that there's an associated cost of 1.5% of the property value. The Mirembe Villas provide property management services such as security, 24/7 CCTV camera monitoring, landscape and garden maintenance, rubbish collection, maintaining of the common areas such as the park and roads. There's a monthly fee for these services. Bungalow residents pay 240,000 Ugandan shillings and double-storied residents pay 350,000 Ugandan shillings. Water is provided by a prepaid water card and power is provided by a Umeme Yaka prepaid meter. The community has a park within walking distance from your house with a kids' play area. There's a plan for a jogging trail and a basketball court as 7 acres of the land have been reserved. The shopping mall is also for sale, with a total of 21 shops including cafes, boutiques, a clinic, bar, gym, supermarket, etc. Here are the details. The 24-month payment plan applies here too. Let's analyze the 75,000 4-bedroom apartment as a rental property investment. We have used the 4-square method and translated that into an Excel spreadsheet. If you want to know more about the 4-square method, here's a link to our guys at the Bigger Pockets podcast. I've color-coded the spreadsheet. The area highlighted in green represents income, red is for expenses, blue for cash flow, yellow for return on investment. Let's start with income, which is the monthly rental income we get from this property. The estimation for a 4-bedroom in this area is $600 per month. You may have other incomes from your property, but in this case, we would like to keep it simple and say we're getting paid monthly $600. So that gives us a total monthly income of $600. I've illustrated that in USD and UGX. The next thing is the expenses for this property, based on the information I've gathered on the standard living cost in this area. You've got a property maintenance fee, water, electric, repairs, gas, vacancy, property tax on rental income, and capital expenditures. Once we add the most common expenses, which are the property maintenance fee, water, electric, and gas, that comes up to $122 per month. Next, we're going to establish what our cash flow is. So what we'll do is we'll take the total monthly income minus the total monthly expenses, which gives us $478 per month. Then we'll calculate to see how much we would make in a year. So we multiply that by 12 months and it will give us $5,736. So with this figure, we know that after expenses, the gross income is $5,736. Then we also want to know how all this is related to our investment. We need to find out how much our return on investment is every year. So we'll find out what the total purchase price was. In this case, it is $75,000. Then we add any closing costs associated. So that will give us a total investment of $76,125. Next, we'll do our annual cash on cash return on investment, which is calculated by getting the annual cash flow, which is $5,736, divided by the total investment, which is $76,125. 125 times 100. This will give you 7.5%. So this means that your annual cash on cash return on investment is 7.5%. If you'd like to see more videos like this and you found this video useful, please hit the like button and subscribe to this channel. Until next time, bye.